In this video, we are going to work problem 6-8a. It is on page 207, 206, and 207 in your textbook. And it is work papers 171 through 177. Okay, I'm going to read the instructions beginning on page 207. It says refer to the worksheet in problem 6-7a. So that's going to be the worksheet on the previous page of your textbook, page 206, for Megafins repairs. The trial balance amounts before adjustments have been entered in the ledger accounts provided in the working papers. So in your working papers, the ledger has the balances from the trial balance. So those are the balances in your ledger accounts. And they provide a chart of accounts here. And what they ask us to do is to journalize and post the adjusting entries, then to journalize and post the closing entries, and finally to prepare a post-closing trial balance. So those are the requirements for this problem, and we're going to start with requirement number 1, which is to journalize on journal page 10 the adjusting entries and post them to the ledger. So our adjusting entries, if this is from the previous chapter, just to review, our adjusting entries are here, and we just need to simply enter those into the journal. So you can see that the first adjusting entry we'll look at is a debit to supplies expense for $300 and a credit to supplies. So we will go to our first journal page, and like they said, this is journal page 10, and enter the adjustment. All of our adjustments are going to be dated the last day of the period, and if you look back at the worksheet, it's for period ended January 31st. When you are recording adjusting entries, you must write adjusting entries on the first line of the journal. Okay, and then our date, January 31st. And we're just copying the entries off the worksheet. So it's supplies, expense will be debited for the $300. And the asset account supplies, whoops, I forgot the S there. The asset account supplies will be credited for $300. Okay, and then we would just journalize the remainder of our entries. And I'm going to pause the video and go ahead and do that. So now I have journalized all of the adjusting entries from the worksheet. And of course, the next step in the process is to post these to the general ledger. So we will start with our first line, which is a debit to supplies expense of $300. So we'll go to our general ledger, and we will find supplies expense. And post that. I have a hard time writing this so small. 2020, January 31st. And remember, we have to write the word adjusting here. when we're posting adjusting entries. And the adjustment to supplies expense was a debit of $300. So now it will have a $300 debit balance. We remember the next step is to write the journal page number that you're posting from. So this would be J10. And then the last step is to take the account number 523 back to the journal and enter it in the post reference column. And that line's completely posted. Then we would go to the next line. We have a credit to supplies expense. A credit to supplies, the asset account supplies, for $300. So we will go to our general ledger. There's already balance in that account, so we're just going to put the 31st. We have to write adjusting here. The amount of the adjustment was a $300 credit. So with a $300 credit to this account, and there was already a $700 debit balance, so you're going to subtract 700 debit minus 300 credit. It's going to leave a $400 debit balance in this account. Then the fourth step is to write the journal page number that we are posting from. Fifth and final step, take the account number, here it's 141, back to the journal and enter it in the post reference column. So we will do that for all of the entries. I'm going to pause the video and complete this part of the process, and then we will resume. Okay, as we resume the video, I have posted all of the adjusting entries. You can see that there because all the numbers are in the post reference column. This is what my ledger looks like after I've posted all the adjusting entries. Okay, so now we'll go back to the second requirement in the problem, which is to journalize and post the closing entries. So what are the 4 steps in the closing process? If you refer back in your textbook to page 190, you will see the 4 steps in the closing process outlined. The first step in the closing process is to close revenue accounts to income summary. Close revenue accounts to income summary. You remember that revenue accounts have a credit balance. To close the account means to bring it to a zero balance. So if it has a credit, to close it, we are going to need to debit the revenue account and credit income summary. Step 1, the entry will always look the same. You are going to debit the revenue account and credit income summary. So if we go back to our worksheet, we can see that we only have one revenue account. And the revenue account has a $4,700 credit balance. So we will go to the journal to make this closing entry. Now, we're going to be on journal page 11. Journal page 11 here. Well, it keeps switching pages on me. Okay, so on journal page 11, we're going to enter our closing entries. Like adjusting entries, you do not have to do individual explanations. You must write closing entries on the first line of the journal in which you're going to journalize the entries. So, and the entries are always going to be dated the last day of the period. So again, for this problem, that is January 31st, 2020, January 31st. Our first closing entry to close revenues to income summary is going to be a debit to repair fees for that balance that we just looked at of $4,700. And the credit to the entry is going to be to income summary. Not sure what just happened. Okay, credit to income summary for $4,700. Okay, that is step one in the closing process. I'm sorry I'm having to flip through pages, but step two in the closing process is to close expense accounts to income summary. Closing expense accounts means bringing them to a zero balance. Expense accounts have debit balances. So to close them, you're going to need to credit each expense account for whatever its balance is, and the debit for all of those expenses will go to income summary. So if we go back and look at our worksheet, we can see that we have quite a few expenses. Several expenses. Each of these expenses will be credited for its balance. Now, you cannot get the balances from the trial balance. You need to get the ending balances for those accounts after adjustments. So in order to close expenses, we will debit each of these expense accounts. We will credit each of these expense accounts for whatever debit balance it has. So if we credit each of these for their debit balance amount, then you're going to end up with a zero balance, which is the purpose in closing. So again, just to drive this point home, wages expense has a $2,150 debit balance. We're going to have to credit that account to close it. Advertising expense has a $200 debit balance. We're going to have to credit that amount to close it. Okay, so let's go to our journal and journalize this closing entry, number 2. So our debit for entry 2 is always going to be to income summary. So we're going to go ahead and write it, but we may not have that amount right yet. So we'll just write it and not put the amount of the debit. We have to credit each of those expense accounts. So you go down your list. You're going to credit wages expense, you're going to wages expense is credited for $2,150, the balance from the worksheet. Then we're going to credit advertising expense for $200. We're going to credit rent expense for $640. We're going to credit supplies expense for $300. We're going to credit telephone expense for $50. We're going to credit insurance expense for $230. Gas and oil expense for $200. Depreciation expense dash delivery equipment is going to be credited for $55. And then lastly, we have miscellaneous expense that needs to be credited for $37. So we've credited each of our expense accounts. And then we add these up to get the amount of the debit to income summary. But you can always double check and make sure that you haven't missed anything. When you add these credits to each expense account up, that total that you get should match the total on the income statement debit column, because what is in this income statement debit column are all of your expense accounts. So all of them were added and we got a balance of $3,862. So when we are preparing our closing entry and we add these, we should get $3,862. And that should be the amount of your debit. But again, you can just verify. Compare it to the worksheet, add these up, make sure that in both places you get the same number. Okay? Then the third step in the closing process is to close income summary to owner's capital. We are closing income summary. So we want the income summary account to have a zero balance. Well, to close income summary, you have to know what the balance of income summary is. And you can't look to your worksheet for that account. It's not going to be on the worksheet. The only time that the income summary account is used is there will always be a credit to it in step 1, and there will always be a debit to it in step 2. Then you're going to have to figure out what the balance is in order to close it. So my suggestion is to always go to scratch piece of paper and make yourself a T account for the income summary account to see what the balance is. So we had a credit to it in step 1 of $4,700. We had a debit to it in step 2 for $3,862. We take the difference between those two and we calculate a balance in income summary of $838. It is a credit balance, and if there's a credit balance, then that means there was a net income, because this is summarizing the income. That's why it's called income summary. It's summarizing the income. So if there's a credit balance, that means there's a net income. Can we double check this information? Absolutely. Go back to your worksheet. What did we calculate net income to be on this worksheet? $838. So yes, when you get to this point of closing the income summary account, the balance in that account at this point should match the net income or net loss on the worksheet. Now, if this account had had a debit balance would indicate that there was a net loss. So when you go back to the worksheet, you should have a net loss on the worksheet. But here we have a credit balance. We have a net income. So if step 3 says close income summary and it has a balance of $838 credit, then how do we close it? If it has a credit balance, then to close it, then we're going to need to debit it. So we will debit income summary, and step 3 says to close income summary to capital. So capital is always the other half of this entry. So we will debit income summary for $838, and we will credit the capital account, and it's Don Megafin Capital here. And I just want to say one more time, this is what the entry looks like if there is a net income. This is what this entry would look like. If there is a net loss, if there is a net loss, then this entry would be reversed. You would debit capital and you would credit income summary. It's going to be important that you know that, okay? So if there's a net loss, then this entry would be opposite. All the other entries are going to look the exact same every time. This is the only one, step 3. It's the only one that can possibly look different. Okay, step 4, the last step in the closing process is to close drawing to capital. Close drawing to capital. Drawing always has a debit balance. So here we see that drawing has a debit balance of $1,100, and it tells us to close drawing to capital. So if we're going to close drawing, bringing it to a zero balance, it has a debit balance, we're going to have to credit it. So this entry, step 4, is always going to be a debit to the capital account and a credit to the drawing account, to close drawing. For whatever the balance in the drawing account was. So it's $1,100 here. Okay, so those are the 4 steps in the closing process. After you have recorded or journalized your closing entries, then you must post them to the ledger. So we will start with our first line. It is a debit to repair fees of $4,700. So we'll go to our ledger and we will find the repair fees account. And we will enter the date, just the 31st. We will write the word closing for each of these closing entries that we post. You must write closing in the item column. The amount of the entry. I'm not sure what happened here. The amount of the entry was a $4,700 debit. Okay, before this entry, we had a $4,700 credit. Now we have a $4,700 debit. You subtract, and $4,700 minus $4,700 is zero. This account is closed. It has a zero balance. We indicate a zero balance with a small ruling through both the debit balance column and the credit balance column. So we do not use zeros, we use the small rulings through each column. And then we will put the journal page number that we are posting from, and that is J11. And then the last step is to take the account number, so this is 401, back to your journal and enter it in the post reference column. And then we'll move to the next line. So we have a credit to income summary for $4,700. So we will find our income summary account. 2020, January 31st. This is a closing entry. And it is a debit of $4,700. Since there is there's not a balance in this account, and that's the only activity, then $4,700 is going to be our balance. Then we must put the journal page number that we're posting from, and lastly take the account number, which is 313, back to our journal and enter it in the post reference column. Okay, then we'll move to the next line. It is a debit to income summary for $3,862. So we're going to go back to that income summary account and post this line on. So on the 31st, we have another closing entry. And this time it is a credit oh boy, did I mess up. Okay. Sorry, you guys. I posted that incorrectly. This was a $4,700 credit. It's always going to be a credit in step one. Sorry about that. And so then we will have a $4,700 credit. I apologize. So we are now in the middle of posting the income summary debit from step two. Again, you're always going to have a credit to income summary from step one, and you're always going to have a debit to income summary from step two. So our step two, we're posting the debit of $3,862. Okay, so then at this point, computing the balance, you had a $4,700 credit balance and then a $3,862 debit. So your balance at this point would be $838. Okay, and then we put the journal. Oops, I erased this a while ago and forgot to put it back. So the journal page number that you are posting from, J11, last step is to take the account number back to the journal. So we will put $313 here. Okay, now at this point we will have to post each of our expense accounts. So we'll move down. The next line is a credit to wages expense of $2,150. So we will find our wages expense account and we will post the closing entry. So on the 31st, there's a closing entry to wages expense for a credit of $2,150. So to calculate the balance, you look at what the balance was before this entry. It was a $2,150 debit balance. Now we have a $2,150 credit entry. So of course we have a zero balance, and we indicate a zero balance with a small ruling through both the debit balance and the credit balance columns. We will write somehow this got erased from somehow the post reference column for the adjusting entry was erased, so I'm going to fill that back in as J10. And then for this entry, of course, we're posting from J11, and we will take the account number 511 back to the post reference column on the journal. Then we'll move to the next line. We have advertising expense, credit for $200. So we will find the advertising expense account. It's going to be the 31st, and we'll write closing. The amount of the entry is a $200 credit. So we had a $200 debit balance, a $200 credit entry. We have a zero balance. So we indicate a zero balance with the small ruling through each column. We're going to write journal page 11 here. And then we'll take the account number 512 back to the post reference column. Okay, at this point, I'm going to pause the video and post the remainder of the expense accounts, and then I will resume with the third entry. Okay, now that all of the expenses, all these entries have been posted, then we're ready to move to our next line, which is a debit to income summary for $838. So we go to the income summary account and we post our third closing entry to this account. So this time it is a debit of $838. And when we compute the balance, the income summary account had a credit balance of $838 before this entry. This entry is an $838 debit, so that's going to leave us with a zero balance, and we indicate that with the ruling through each column. We'll write the post reference, the journal page number we're posting from, and take the account back over to the post reference column of the journal. Then we will move to the next line, which is a credit to capital for $830. So we'll find the capital account. 31, closing. It is a credit of $838. And so our balance before this entry was $8,000, and now there's an $838 credit, so it will be 8838. We will enter the journal page number we're posting from and take the account number 311 back to the journal. And then we'll move to our last entry, entry 4. The first line is a debit to Don Megafin Capital for $1,100. So we'll go back to the capital account and post an additional closing entry, $1,100 debit. So this account had an $8,838 credit balance, and now there's an $1,100 debit entry. So the balance is going to be $7,738. We will put the post reference, the journal page number in the post reference column. Ooh, I lost my spot. Okay, so there we are. The journal page number in the post reference column, and then we'll take the account number 311 back to the post reference column of the journal. And then our last line is a credit to the drawing account for $1,100. So we're going to find Don Megafin Drawing. We're going to write the date. We're going to write closing. We are going to record the $1,100 credit. Then when we compute the balance, you will get a zero balance. So we indicate that with a ruling through each column. J11. And finally, take 312 back to post reference. So after all of the closing entries have been posted, all of your temporary accounts should have a zero balance. So in other words, revenues, expenses, and drawing should have a zero balance. But the next step in the process is to make sure that's the case. So our third step is to prepare a post-closing trial balance. So that will verify that only the permanent accounts remain open and that the debits equal the credits. So you will go to your last working paper for 6.8a, and the first thing that we must do is enter the heading. So this is Megafin's Repairs. Post-closing trial balance. And actually this should be centered on the worksheet. I am having a hard time writing on this screen, and I ended up writing it in the wrong spot. So just move that over to the center, if you will, when you prepare yours. But it's January 31st, 2020. And then at this point, you will go through your ledger and look at each account and write its account name, the account number, and its ending balance. So if I look at my ledger, the first account that has a balance is the cash account. The cash account has a balance of $3,673. It's a debit. So on the post-closing trial balance, I'm going to list cash, account number 101, and its balance of $3,673. Then the next account is accounts receivable. It's account number 122, and when I look at my ledger, it has an ending balance of $1,450. So I'm going to pause and finish this part, and then I'll come back and we'll talk about the entire process. So here is the completed post-closing trial balance. And as you can see, the only accounts that remain open are assets, liabilities, and the capital account. As we look back through our ledger, all of the expense accounts have zero balances. All of them have been closed. And the revenue, you can see the revenue's been closed, and income summary and drawing have been closed. So our balance sheet accounts are the only ones that remain open on the post-closing trial balance. And I believe that concludes this problem. It's quite a long problem. So please let me know if you have any questions as you work through this.